thanks for watching this video on AMC Entertainment Holdings. So this video is mainly based on technical analysis, and just to give you an idea of how technical analysis works, and just to get you more confident with it. So technical analysis, it's not always 100% sure. Of course, everybody will be very rich, but it gives us an idea where this stock, in general, where all the stock are before going long or before going down, or perhaps just they can tell us to hold for now. And as I always suggest, please read a lot of news about any of the companies that you would like to invest in, and try to combine always technical with fundamental analysis, because both of them should give or tell us the same information. So as we are right now with EMC, prices have been moving sideways for the last year, so inside the channel between 7.7 US dollar and $2 US, and this is $5 US, almost the mean value between those two. So generally when it goes up, the idea, because prices have been moving inside the channel, when using the channel theory, we cannot use the exponential moving average. Actually, we can get rid of it. It's not gonna help us a lot in this situation. What help us a lot is perhaps the stochastic. When the stochastic is close to the top resistance level and is in oversold, the idea would be to go short, and vice versa. When prices are closer to the support level and the stochastic is in overbought, sorry, this is vice versa, stochastic oversold but close to the support level, that is to go long. Stochastic overbought, very close to the resistance level, the idea would be to go down. So as we are right now, what we can see that perhaps in this situation was good to go down. In this situation, actually, this one also, but it seems then, you know, it was not able to pass even the mean value of this channel. So that's why it's always too risky to invest when prices are moving inside the channel. Generally, a trader would like to invest only when there is a proper trend line, but it means that the almost 60-70% of the time when prices are moving sideways, we should not invest. So so that's why we need to find a way how to get in all the markets where there is no a trend, so as perhaps in this case. So what we can say right now, this blue line is the major trend, and the new resistance level of $20 US was reached before the end of, I think at the end of January, and now the prices are going down again with the next support level that can be $5 US or also $2 US. So as we are right now, best option is hold, wait this end of price retracement before going long. This is mainly based on technical analysis. Would be good for us if those prices will go down up to this $2 US, so that it has never been broken before. I mean, at least for past 6 months or 1 year. But the idea is that if at least we know that this support level worked as support level, and if the prices will keep going down up to $2 US, and if the $2 US will not be broken, will be a good signal to go long. As well as if this support of $5 US will not be broken, perhaps the idea will be to go long, but $5 US as support is not as strong as the $2 US. I will trust more the $2 US support rather than this $5 US. So in conclusion, for EMC, as we are right now, just hold, because prices can keep going down up to $5 US or up to US, or there is another scenario where prices will start going up from next week, and only if this resistance level of $7.7 US will be broken for at least 2 days in a row, meaning that at least Monday, perhaps Monday and Tuesday, the close price of a daily candlestick has to be always above $7.7 US. If it will happen, what we can say that this resistance level has been broken. So, but only if for 2 or 3 days the close price of this stock it's always above $7.7 US. US dollar. So it means that when you go on a daily candlestick, you put one day, this is 45 minutes candlestick, you go on a daily candlestick and you see that at least for 2-3 days in a row, the close price of that candle has always to be above 7.7 US dollar. So this is my understanding, mainly based on technical analysis, but based a little bit of fundamental analysis. We are still in this hospitality businesses, in cinemas, but I think it's now everybody got used to watch movies at home, but hopefully, but I think everybody's looking forward to go back to cinemas, of course, to go out. It's gonna be tricky business. I think it's gonna be totally different after the virus, and it applies for all hospitality businesses. So all the businesses in the hospitality they're gonna feel the effect of this coronavirus. So they've already I think they've already been impacted a lot. Yeah, I don't see as basically as we are now old mainly because technical analysis is telling us that there are no opportunities to go long right now, and then the second thing is that based on fundamental analysis, where we are still living in with this virus, even if vaccines are with us, but it will take time, at least 1 year, 2 years before going back to regime. So going back to I don't know, last 2-3 years ago. Where people were confident to go out. So it's not gonna be straightforward for all those businesses in the hospitality. So this is my understanding, and I hope you enjoyed this video. Thanks. Bye.